All right, fashionistas, but I will admit that this is a pretty amazing stock rally to watch. I mean, as an observer, it is really a fascinating display of kind of pure irrational exuberance. I mean, really, when you think about it, I mean, I'm just sitting back and watching this whole thing. And again, I just use numbers, okay? I use numbers. I don't say unrelenting bull, just pull phrases out of the air. I mean, I use numbers as a scientific way to look at what's going on, as a way to kind of measure and gauge the rationality of what's going on. I use the scientific method, all right? For example, back in the third quarter of last year, right up to the election, the economy was growing at 3.5%. That was a very nice pace, okay? And I remember back then, from August all the way to the election, people were selling stocks. The Dow had that 3-month period. The market had that 3-month period of going down. I was buying, all right? Then in the fourth quarter, the growth slowed to 2.1%. So what's that? Almost a 40% slowdown. Stock market took off. And now in the first quarter, we'll get the first reading on Friday, but they're talking about 0.4%. So, I mean, it slowed down 80%, right? Or 90% almost from the fourth quarter. And they have taken stocks up to a new record high. Now, it's not just the GDP, all right? You could talk about personal income growth has slowed down. You could talk about construction spending has slowed down. You could talk about inventory accumulation has slowed down. You could talk about business investment has slowed down. You could talk about bank credit, the whole contraction in bank credit that we have been witnessing. So I mean, you could talk about the trade deficit, which has gone up, and that is a drag on GDP. So you talk about, of course, the fiscal flows that have slowed down to a crawl, also about 0.8% growth over last year. I mean, last year at this time, the fiscal flows were expanding at a rate of about double that, about 1.7% year over year, and we were already up, I think, about 42 billion over the prior year. Right now we're up around 26 billion, okay? So I mean, you've seen it. Seen the slowdown everywhere, but they keep taking stocks higher and higher. You talk about corporate earnings. And while corporate earnings, for the most part are coming in better than expected this quarter, it's a slowdown in prior quarter gains in corporate earnings. So I mean, I can only look at the numbers, all right? That's how I have approached investing for a long time, and it works. That combined with mental game works. Now, there are going to be periods of time and they're irrational periods. I mean, why did they sell the stock market down 1,000 points after Brexit? Why did they consider Trump to be a terrible bet for stocks and then suddenly did a 180 and he's fantastic, and now he's not, he hasn't done anything, but he's still fantastic? I mean, all of these things. Oh, the Macron, I was talking about that earlier. How do you elect one guy and deem him to be super bullish for the economy and the markets? That is Trump, because he's an anti-globalist. He's not a free trader. He's a nationalist, right? He was for fiscal stimulus. How do you say that guy's really a bullish guy, but then turn right around and say the other guy, Macron, he's really bullish because he is a globalist. He is a free trader. He is pro-immigration. He is pro-austerity. He is pro-financial sector and against everything else. He is for massive cuts in the social welfare state, all that stuff. So you can't have it both ways. All right. So this is a snapshot of a period of irrationality. It's a bubble. How does it blow? I don't know. When does it blow? I don't know. Obviously, it's running up right now. But you look at the arguments of those in it, and they're kind of like, they're just, they're sound bites, okay? This is, the unrelenting bull. No choice but to be long of. I mean, there's no real argument there, okay? Can't make a bullish case, can't make a bearish case. I've made quite a few bearish cases here. So I can only go by the facts and the data and approach it in a scientific way. That's me. I'm not saying that you have to do that. That is me. That is the way I have always conducted, or not always, but in recent years, and have been very successful. That's the way I conduct my approach, using MMT. And all this stuff is wound into MMT. I mean, the fiscal flows, which is the core of what I look at. All right, the bank credit and what is going on there. The policy measures that are being proposed. Don't forget, even Trump's stuff, all right, with the big tax cuts we're going to hear about tomorrow. On the other side of that are all the spending cuts. So it's fiscally neutral, basically, from what I could see. And you've got the, last night he put a 20% tariff on imported Canadian lumber, which is bearish for the U.S. dollar against the Canadian dollar, but they're selling off the Canadian dollar. So, I mean, all this stuff, to me, it's a reflection of a period we are in right now of very high emotion, very high irrationality, very high lack of understanding by the masses of investors who are piling in. And it ends in a different way. I can tell you that. It ends in a different way. There is no rational argument right now that anyone could put forth to justify what is happening. You can't do that on the basis of economic growth. You can't do that on the basis of earnings. You can't do that on the basis of policy, all right? You can't do that on the basis of fiscal flows. You can't do that on the basis of monetary policy. I mean, you can't. Sorry, you can't. So the bullish contingent, the bullish crowd, is a soundbite-driven, highly emotional, euphoric period, euphoric feeling type of thing. That's what's happening right now. Because you cannot make scientific arguments for the level of stock prices right now. Sorry, you can't. That is a fact. And yes, they're going up. I see that they're going up. But, that is a temporary thing. I can assure you, absolutely. We'll come back to this video. I can assure you. Bye.